All right, fellow AMC stockholders, XMAX Trading here. I'm going to go over the important news of the day regarding AMC stock, January 3rd, 2022. Go ahead and subscribe to the channel if you haven't already. We're going to dive into the FTDs again. This just came up recently, so let's get started. AMC fails to deliver, soar past 400,000 as of January 3rd. They're back. It's like a Chucky doll. FTDs. Okay. After bouncing around at mostly low levels in November, December saw AMC FTDs soar to 400,000. AMC's registered 400,000 shares failed to deliver as of December 14th, the last day in the dataset released by the SEC. This represents a nearly 70-fold increase from the last reporting period, so 70 times. Shares fail to deliver when the trade is not closed out properly. This can happen for benign reasons like administrative errors. But when there's a persistent pattern of high fails to deliver, as we see much through 2021, they can be a sign of something more nefarious, naked short selling, or short selling shares one does not own, causing huge FTDs. These shares are never delivered because they are never existed in the first place. And you know what? Retail's buying it up. Institutions long in AMC are buying it up. They're buying up these FTDs, these synthetic shares. This is an illegal trade. This is an illegal trade, and it's a powerful way to push down a stock price. Yeah, look at all that. Pushing it down. Sure enough, as fails, its FTDs mounted in the first half of December, we saw a steady decline in AMC's share price. So some of the selling could be institutions selling because of tax season, end of the year tax season. But then these naked shorts come in to further push the price down to try to demoralize retail to giving up. Not financial advice. Shares fell 14% in less than 2 weeks. AMC's failed deliveries are completely out of line compared to other stocks. Much larger companies like Amazon, Apple, Microsoft only had a tiny fraction of their FTDs at the end of the reporting period. Maybe nothing inappropriate is happening here, but I'd like to see the SEC investigate it and find out, rather than just releasing the same shocking data month after month with a shrug. Makes sense to me. Oh, this is the previous one. Oh, damn. I went over that article before, but I didn't want to see that. Whew. So here's a website. Let's see, Stock Sarah, PythonAnywhere.com, ticket failure, AMC. So failures to deliver. Failure to deliver is derived from the SEC. The T plus 35 theory, as quoted from the SEC, if FTD position results from the sale of a security that a person is deemed to own, and that such person intends to deliver as soon as all restrictions on delivery have been removed, the firm has up to 35 calendar days following the trade date to close out FTDs positions by purchasing securities of the like kind and quantity. In the event of an FTD surge, FTD quantity more than 1 million, more than the 90th percentile FTD amount, or at least 100,000 FTDs, for stocks that are heavily shorted, such as AMC and GME, on T plus 35 date, stocks might experience a surge in price action. You can refer this post on Reddit for more information. Wow, 7 months ago. AMC's FTDs will spike. Prices on the 21st, 22nd, 23rd, 20th, 29th, T plus 35. This is 7 months ago. On April. I won't go into all this, but regulations show Rule 204 states hedge funds need to cover their FTDs before regular trading hours on the 35th day after the FTD date. My T plus 35 theory shows they wait until the last possibility to cover, so the 34th day of the FTD date, which is why our third column formula is A1 plus 34. If the 34th day lands on a weekend or holiday, bump it forward the next business day. Regulation SHO states you cannot short a stock if you have FTDs open. Once the FTD is covered on the day, the GME price will not return to that point. That's it. All you need. FTD spike. Failure to deliver.com. Make sure you bookmark that one. Let's go back. All right, so what we have here is AMC. Huge spike. Look at this. This was 27 million. FTD. Oh, this is just August, November 2021. $5 million quantity. Oh, a couple thousand here. 64,000. That's the dollar amount. 350,000. It's a lot. 30,000. So let's look at this. So before this time last year, Fed delivers 4.4 million. We're getting up to 13 million, 11 million. This one spiked on 127, 27 million. Then we had this price surge, right? Price surge from $5 to $20. So then settles down. A little of a spike here. FTDs were 2 million, and the price went up $10, $14. So FTD spiked again, 2.7 million, and then we had this huge surge. I don't know if these were like all due or something like that, you know. Maybe they put them off. It's hard to say. Then we got this huge spike from $10. $62. Price $62. Huge spike up. And there's another spike after this. And then calm down. And then spike again. And then very calm. FTDs. 400,000. 12.3 is 700,000. 400,000, 700,000, 12.3. T plus 35. So there might be some coming up January the 7th. So 8,000 coming due. This is pretty interesting, guys. I mean, you can tell here that failure to deliver amounts, amount of shares, the price at which that happened, the dollar amount that's owed on T plus 35 date. It's pretty crazy. T plus 35. I wonder if they push these off further too. I mean, they violate the T plus 35 rule. 200,000, 300,000, yeah. Oh, 600,000. Right there. 11.9, 11.10. I mean, I know for certain we're buying these on December the 9th, December the 2nd. 1.61 million. September the 9th. Yeah, 9.399. Yeah, price is increasing. I mean, you could tell. But it's just nothing. It seems like nothing was the way it was before. But we're watching this, though. 7 July the 2nd. July. In the millions. So they borrowed a lot to try to cover it. And those due in August. August the 8th. Huh. And they started buying it then, and then that's what caused it. There's like an after effect. There's like an aftershock, from this. And it goes down, and then an aftershock, boom. I don't know. I think retail keeps buying the stock. Short volume. So short volume, long volume, that peaked. We don't have 6 months. July. Short volume, long volume, lots of volume. Price didn't move much. Hmm. 1-3 short volume, short exempt volume, total volume 13 million percent shorted, 56% shorted. The total volume, the short exempt volume, short exempt. Yeah, that makes sense. So half the volume was shorted. 60% shorted. I bet when those FTDs come due, they short the hell out of this thing using short volume somehow. %. Oh, it's pretty crazy. And then what else is on here? Analysis. Short percentage of the float is 22% now, because before it was 21% on FinViz. Now it's 22%. Short percentage of the float is increasing. You know, floating shares, 440 outstanding shares. The 200-day simple moving average is 33. We need to get above that 200 moving day average according to be bullish, according to Paul Tudor Jones. 50 days is 34. So the 50 day and the 200 are converging together. Okay, so hopefully we'll get more bullish action on that. Volume 27 million. 28, 29, 26. Historical data, price change, insider trading, yeah, sales, net rebuy up, new sentiment, bullish. AMC is refinancing their debt. Google Trends. Oh, look at the Google Trends. Interest in AMC. 48 interest, peak price. The interest closing price, 48%, 90% of interest. Closing price. Interest is going back up. Price. All right, guys. Leave a comment, like below. See you in the next video. Later.